Hello and welcome. In this video we are going to take a look, build and backtest a certain trading strategy in Python. First of all, what is the strategy about? It is a combination of a short-term momentum entry and a trailing stop-loss exit. I've pulled this chart here to make the strategy crystal clear. So let's go over it together. So you buy the coin when the Bitcoin is rising by a certain amount over the last, let's say, 1 hour. So as an example, you buy when the Bitcoin was rising by 1% over the last 1 hour. When buying, you set a stop loss. Let's just take 2% stop loss. So when the coin is dropping by 2% after that, you exit with a loss. This stop loss is not fixed, but it is moving whenever the price is moving upwards. So as you see here, we were buying after the coin was rising, and then the price is moving further upwards. And this gray dashed line is the trailing stop loss. So the stop loss is amending with the rising price until the point when the price is crossing below this trailing stop loss line. So this is your trade. You buy here and you sell here. Looks quite nice in the first place, but you already see that it is not working all the time. So for instance, in this rather sidewards market, it is not working at all. You're buying here, you're selling here, you're buying here, you're selling here. Bad. But as you see, you take the big moves. And that is the interesting thing about this strategy. So for instance here, the recent, what is called Jose here, you take with this strategy, right? So dependent on your parameters, you maybe buy here, then you sell here, you buy here again, then sell here and so on, right? So with these parameters, it looks quite too good to be true here, but it is just an example. So in a nutshell, you just take the upward movement and the stop loss is amending with a further upward movement, securing price gains after you've bought and also avoiding too much losses because you have a stop loss. And that is already it for the strategy. So let's build and backtest that with Python. All right, let's get started. We need some libraries. Pandas for data handling. You need the Python Binance library, so be sure to install that. From this one, we are going to import from Binance client, import client, and we are also going to instantiate the client. Then we need historical Bitcoin prices. So I have done that in many of my previous videos, so I'm just going to copy paste the function to achieve exactly that. So this function get data is pulling 1 hour granular prices for a given coin. So let's go very quickly over it, but I'm going to link a more detailed video in the video description. So this function get data, taking a certain symbol, in our case Bitcoin in relation to USD/USDT, the stablecoin equivalent, from a given starting point on. So we are just going to take the beginning of the year 2023 here. Then this is just pulling historical K-lines, so candlestick data for that symbol, in this case Bitcoin, for the 1 hour interval starting in the beginning of 2023. Then this is just pulling the first 6 columns as the rest is not containing relevant data. Then it's just doing some renaming as the columns are, because they're integer names named when you pull it from the API or using the Python Binance client. So this is just naming the columns here, then is setting the index of that data frame to the timestamp value. And this is just transforming the Unix formatted timestamp to a human readable timestamp, and then is converting all other values in the data frame to floating type values. So if I'm going to call that function on Bitcoin USDT starting in the beginning of 2023, and store that somewhere in a data frame, you will see that I'm getting 1 hour granular Bitcoin USDT data, which I will go over now. So you see we have a daytime index here, so 1 hour granular data starting at the beginning of 2023 here, right? Open, high, low, close columns, volume also optional. You can also not pull that. So you see 1 hour granular data, overall 9.5k rows. So you see we are going until today, 1 p.m. So this is the most recent timestamp. So we have quite a data frame here containing our prices, and we need to do some manipulations to that data frame to make things easier. So the idea going forward is to just loop over this data frame and then construct our strategy I just explained. But before doing so, we have to do some amendments to that data frame. First amendment will be to find a realistic buy price. As I said, we are trading on the recent performance of the Bitcoin. We need a realistic buy price. So if we calculate the recent performance, and let's say we calculate the return between those two rows here, so to see how much the coin moved over the last 1 hour, then you're taking this data point into consideration. And if you take this data point into consideration, you cannot buy on that data point, because otherwise you would have a so-called look-ahead bias here. You can only buy on the next candle's open, which is this price here. So what I'm going to do to make things easier is to just create a price column containing the open price, and I'm just shifting it 1 row back. So I'm getting the buy price in the same row as the potential signal. All right. So I'm going to create a column here, price, use the open and shift it 1 row back. So this is looking like this. So you see we have a price column, and as I just said, this is simply the next candle's open price in the same row now. So this one is this one, and so on. Next, we need to calculate the hourly return here. So I just want to have the relative change between every row. So I want to see how much return I made in 1 hour here. So I'm just comparing this price and take the percentage change of that price change. That's straightforward. I'm just taking the close column here and apply the percentage change function. You can also use the log return here. Might be even better. But for now, we're keeping it simple. Just creating a new column here, calling that red for return, and apply the percentage change function. So let's take a look at the data frame one more time. So you see, this is the return. So that means the close was rising by this percentage here. Then the coin was dropping by this percentage, and so on. So as you see, we have some NaN values here. So we are just getting rid of them. So using drop NA and reassign the data frame to get rid of the NaN values. So this is our final data frame, and this is everything we basically need to construct our trading strategy. And let's do it step by step. So what I'm going to do, as I said, is I'm just looping over the data frame, screen for the buying signals, and also apply the trading stop loss logic within the loop. And it's actually not that complicated as you might have thought. So first of all, we are just creating a list as a storage where we are storing our profits of every single trade. So this is just profits and an empty list, which is going to be populated within the loop. Then we set a position flag, which is keeping track of if we are currently in a position. Because if we're in a position, we want to check the selling condition, and if we are not in a position, we want to check the buying condition. So this is just keeping track of whether we are in a position or not. And this is a Boolean value. In this case, initially, we are not in a position. this is the setup, and now we are just looping over the data frame. I'm using iteros here. You can also solve this, vectorize this, a challenging but interesting idea to do so. So we can do it together if you want. So let me know if you're interested in that below. Also very interesting one in my opinion. So for index row in df iteros, so we are looping over every single row in this data frame df. And now first of all, we want to check the buying condition. So we check for this value, this return value, being above a certain threshold. Let's start with 1%. So 1% is quite a move, right? So that means the Bitcoin was rising by 1% within an hour, all right? So we are starting with that to keep it simple, but we are playing around with some more parameters later on. So if I'm not in a position, this is the first check here, because otherwise if I'm in a position, I don't want to check my buying condition. So if not in position, so I'm checking this flag. Initially it's false, so I'm not in a position. And the row return value. So as said, I'm looping over every single row, and then I'm checking this value in the first iteration. Is that above 1%? It isn't, as you see. This one isn't either, and so on. But it's looping until we have that. So if that value is above 1%, so above 0.01, then I want to buy. So I'm going to lock in the buy price as the row's price. So this is what I just said with the look ahead bias. So this return value is based on the close price. So we cannot buy on this close. We can only buy on the next candles open here. So once I have this return value, I want to buy on this one. And as I shifted it in the price column, I'm just using this value. All right. So row price is my buy price. And then I want to set my position flag to true. And now, very important, I want to define my stop loss. And I'm going to call that trailing stop, because this is going to be changed in the next iteration. So my trailing stop is my stop loss. So in this case, I'm just taking, let's start with whatever I said in the beginning. I think it was 2%. So let's start with 2%. So my stop loss is buy price times 0.98. All right. So my stop loss is 2%. So my trailing stop is defined here as my buy price times 98%. So 2% stop loss. And that's already it for the buying condition. Now we're getting to the interesting part, which is the trailing stop loss. So the logic behind the trailing stop loss, which is actually quite straightforward, and the selling logic here. So we're going to say if we are in a position now, which is the case after we have entered here, because we set the position flag to true. And if we are in a position now, we want to define or amend our trailing stop loss. And the logic behind that is quite straightforward. So if you have defined the trailing stop loss and the price is now moving upwards, you just amend. So how can you check that? You check the close price in the next iteration times this defined stop loss. So in our case, 0.98. And you check, is that larger or equal to your currently defined trailing stop? So again, we have our trailing stop. Let's just take a numerical example here. So let's take buy price of 100 US dollar. Then our trailing stop is 98 US dollar. But now if the price is moving further and you have like 102 now, your trailing stop loss is also amending upwards. So I cannot calculate that in my head, but it's just 102 times 98%. So your trailing stop now is amending upwards. All right. So when that is the case, but only if this value, if the current close times the stop loss threshold is above your current trailing stop. So if the price, in other words, if the price is moving upwards, the trading stop loss is amending. So you have to redefine the trading stop as now the close times 98%. This is your new trailing stop loss or your new stop loss when the price is moving upwards. So when the price is moving downwards, this value is always smaller than this value. That's clear. But if the price is moving upwards, this is amending. And that's already it for the trailing stop loss logic here. Now we have the trailing stop loss. Now we want to check what is happening if we are crossing below the current trailing stop. So if my close value now is smaller or equal to my trailing stop value, then I want to sell. And as I'm considering the close price now, same logic, I can only sell on the next candles open. So my sell price is simply my price value again. And out of that, so I have a sell price, I have a buy price, so I can calculate a profit. So profit is my sell price minus my buy price in relation to my buy price. So this is my relative profit. This is my absolute profit. This is my relative profit. And as I made 2 trades, and trading Bitcoin unfortunately is not free on Binance anymore, or if you consider other coins like ETH or whatever coin you want to consider here, you have to subtract the trading costs, and one trade is 0.075%. So buy and sell is just the value times 2. So these are your trading costs, and we want to directly consider them in our profit calculation to have the realistic or the most realistic possible way to show the trading strategy. You can also cancel that out if you want to see it raw here, but I'm just considering it for now. So we have the relative profit calculated, and we are just going to append that to our profits list to have the profit of our first trade. Then the loop is moving into this chapter again, and then we have the second trade and so on. So profits, append my profit, and very important, the position flag now is false. All right, so this is generating our profits. So let's execute that. And we have a list of profits now. So you see first one turned out very well. Then we have some losing trades, but also some very high winners here. So I see 11%, but let's take a look at that in a more meaningful way, which is a visual way, just generating a series, so Panda series out of these profits, so out of this list, to apply some Pandas methods on it. So you could take a look at how those profits are looking like. So you see you have some very high profits, but your loss is always limited here, right? Which is simply due to the fact that you're working with a stop loss here, which is amending upwards. So if you want to see it as a cumulative return, you just take the profits, add a 1 to that, then apply the cumulative product function. So I have details on return calculation in other videos. I will link it in the video description in case this is not unclear. What you're just doing here is you're just accumulating profits, and as these profits are non-log profits, you just accumulate them by taking the product. I've explained that in another video in detail. So this is just taking the profits or the returns of the trades and then is accumulating them over time. So you see you have quite a return here on this trading strategy. Now overall, so if you want to have that overall, you can just take the product instead here. So you see only the final product, which is 84%. Now if we benchmark that against the development of the coin, so I'm just taking this one and divide that by the initial price here, you see that this strategy didn't outperform the Bitcoin itself, but you see that you were reaching this profit with 82 trades. So this profit including trading fees here. So this is quite an interesting return, but the question now is, can we make it better, right? And with that, you play around with some parameters. So who knows, let's say, if those distances are maybe not large enough or not small enough, maybe. So we are going to factorize this loop into a function and then play a bit around with some parameters. I think that is a very interesting one. So let's transform that into a function. So just indentate everything here, then give it a name. Let's call that trail for trailing stop loss strategy. This is taking a data frame. Then the let's call that the rise, so the entry. Let's call it entry, it's better. Entry, and then the distance as the stop loss. So I'm just calling that distance. So in our example, to make it simple, this 1% rise to enter is simply my entry threshold, and this is my stop loss value. So that would be this. All right. So what I'm just going to do is, as I said, very straightforward. I'm just going to replace that with entry, and then replace those values with this here, this, and then I'm also going to accumulate those returns here. So I'm just returning, so I'm just doing this step within the function. So I'm just returning the series of profits accumulated. All right, so if I'm executing that and didn't mess up, I should get the same results. I'm getting rid of this one for now. So let's test that trail. Then we had an entry of 1%. The F was the first argument here. Then we have an entry of 1% and a distance of 2%. So we are getting the exact same overall return here. And then, as I said, you can play around. So what is if we extend the distance here? So if we want to have a 5% trading stop loss with the same entry here, you see that this strategy would be worse here, right? Still quite a significant profit, 71%, but worse than before. We could also play around with maybe a lesser entry threshold, and let's keep that at 95% here. And then you see we are landing at 94% here, right? Still not beat the benchmark, but we made quite some significant profits here. So let's play around with some more here. So let's decrease it a bit. Doesn't make a big difference, but you can play a bit around with that for yourself here, right? So maybe we have this one here. Yeah, then we even get close to the benchmark, right? Let's finally take a look at another asset. So let's take a look at ETH. So we have ETH here, pulling prices, do the exact same manipulations here again, return, dropping NAN values, getting rid of this for now, define our trail function, and then let's work with 95, and now we have 70% for this strategy, so also seems to work with ETH, 37% with a 1% movement, and so on here, right? So this one wouldn't be that good idea. So 56% here, How did the Ethereum price move? Roughly 100% here, right? So this one divided by this one, 92%. So there will be some parameters where you beat the strategy, but this is for you to find out. So going forward, well, you could also, as I said, apply a vectorized backtest on this one. You can play around with parameters, but I think for now this is quite an interesting one. And yeah, I hope you liked this video. Let me know what you think in the comments below, and I'm looking forward to see you in the upcoming videos. Thanks a lot for watching. Bye bye.